If you're looking to see how much money you can get out of your home using a reverse mortgage, then you're in the right spot. My name is Jason Eichmiller, and in a second, we're going to do a reverse mortgage calculator for the following ages: 55, because that's the minimum age you can be to get a reverse, 62, 72, 82, and 92. And we're going to do that at assorted home values. So if that's what you're looking for, if you're looking for a reverse mortgage calculator, but you don't want to put your money into the website because you know you're going to get called by about 78,000 salespeople, then stick around and I'm going to do my best to help. So let's go on to the PowerPoint here, and we're going to roll through this very quickly, mostly because I've got to take my daughter Alyssa to volleyball in about 12 minutes. So the clock is ticking. So what's happened? Why are we talking about loan sizes more now than we were before? Well, what a lot of folks understand with reverse mortgages, especially if you've been watching my channel for a while, is the amount of money that you can take out of a reverse. It generally depends on three things, and you would think two. Number one is age. The older you are, the more you get, of course. The other is home value. The more your house is valued at, the more money you get, and vice versa, of course. But the third thing not too many people look at, and it's interest rates. So generally, as interest rates drop, you qualify for more money, and as they increase, you qualify for less money. But there's a catch here, and let's use the Fed cut the overnight interest rate at 25. They basically lowered it by 25 basis points. By the way, if this is boring, hang tight, and in a couple minutes, we're going to go straight to the calculator, and it's going to show what you can get at certain age amounts. But to give you an idea of how they calculate it out, they're going by something called the 10-year CMT. They are not going off the overnight rate, which is what the Fed just cut. So the last time the Fed cut rates, oh, here we go. What does a rate cut mean for reverse mortgage cash? It should say cash, but I guess it's at the bottom of the page. So let's just see here, make sure this all works. Okay, good. So you can see this is kind of a teaser to the calculator. It's going to go on later on. So what the Fed cuts is they cut the overnight interest rate. They cut what the banks borrow money from the government at. What it didn't cut is mortgage rates. And actually the last time, like I was saying, when the Fed cut the overnight rate by 50 basis points in September of 2024, guess what happened to reverse mortgage rates? That 10-year went up, those rates went up, and that means the money that you got in your pocket went down. Now, I'm going to get to that in a second. Just want to introduce myself real quick. My name's Jason Eichmiller, and I own and run Reverse Mortgage Reality and Key Home Lending. Here we go. Here's a picture of my family. Couple older pictures, and then there's a newer one of Jason, Alyssa, and Molly about to go to their first day of school. That's my family. My website is www.reversequotes.com. If you're looking for information on this and you want to talk with a real human being, I've been doing these since 2008 and helped a little bit over 470 folks learn about and get reverse mortgages. So I'm glad to speak with you, glad to help. My phone number is 888-309-9705. You can actually see it flashing on the bottom of the screen. The email address to get me directly is jason@keyhomelending.com. Or you can go to this website, reversequotes.com, enter your information, answer a couple questions, and we can pick a time to talk. If you want to see how some of my clients feel about their reverse mortgage experience, then just scroll down on Reverse Quotes, and there's a bunch of testimonials and videos that I did with my clients. So hope that makes sense. That's me, and again, this is the family. So now let's get into the bread and butter of this. It's been 4 minutes. How has reverse mortgage money changed over time? And the reason why we're doing this slide is you're just looking at, it says the 1-year treasury rate. It's really the 10-year treasury rate. I think I hit a 0 and it didn't equate on the PowerPoint. But on the 10-year treasury in October, it was about October 2023. So just about 2 years ago, it was 5.5%. That's when interest rates were about as high as possible. And if you look at a 72-year-old with $1 million home value, with the HECM, they were getting $328,000. And with a proprietary reverse, they were getting $359,000. Now, if you look at it now, that same 72-year-old, or I guess a 70-year-old then, a 72-year-old now with $1 million home value, well, the treasury rate has dropped pretty drastically down to 4.05, 4.06. And the HECM is now returning 375 instead of 328. The proprietary on $1 million home value, the proprietary went up almost $100,000 from 359 to 443. That's remarkable. And again, I want you to start thinking, this doesn't go off of the Fed. It doesn't go off of the overnight rate. It goes off of the 10-year treasury note. So if you're good with that, I'm good with that, and we are moving on. So now let's take a look at a reverse mortgage calculator for age 55. Now the home values that I put in, we could have put anything in, but I don't want this video going too long. We've got home values of 400, 700, $1 million, and $2 million, and we're going to have that across the board for every single age. Now, there's an NA for the HECM, and that reason is because you have to be 62 to get a HECM. But the proprietary, you can just be 55. So on a $400,000 house, you're looking at about $147. On a $700,000 house, $259. $1 million house, $370, and a $2 million house, $744. So you're looking at about, at age 55, you're somewhere in that 37-ish, 36 to 38% of your home value, which has gone up, again, drastically from where it was a couple of years ago. Even months ago, this number has gone up. So now, age 62. Now here at age 62, we're introducing the HECM, which is the home equity conversion mortgage, which is the FHA reverse mortgage. So as you can see here, anything that's in red, that means you're getting more cash out of the program. So I always like to compare the proprietary versus the HECM. And we'll get into a slide where it tells you kind of the differences between the proprietary and HECM. But suffice it to say, the proprietary is giving more money at most of the ages. But here's a teaser, not every single age. The HECM comes back to beat the proprietary. You're going to have to watch later on to figure that one out. So 62, $400,000 house, the HECM's 121, the proprietary is 154. That's $33,000. At a $700,000 house, 218 versus 271. $1 million home, 315 versus 389. That's 60-something thousand dollars. No, 70-something thousand dollars. And at $2 million, well, the proprietary, that's not really a fair battle because the HECM, the maximum home value for the HECM is 1.209 million. Whereas the proprietary can actually loan up to $4 million, which is pretty neat. So that's age 62. 72. All right. Now the HECM went up to increase to 145. The proprietary is up to 176. $700,000 house, the HECM's 260 versus the proprietary at 310. $1 million home, you kind of get it. You can read just as well as I can talk it out. But the proprietary is still winning at age 72. So 62, the proprietary wins in just pure cash out. 72, the proprietary ends. But what happens at age 82 and 92? Hold on. Before we do that, let's go into some of the advantages and disadvantages of the proprietary versus the HECM. Because you might be thinking like, wow, the proprietary gives me more money. Why wouldn't I do it all the time? Here's the deal, guys. When you're looking at the HECM is extraordinarily creative. You can do lines of credit. You can do monthly income. You can do a combination of a lump sum, a line of credit, and monthly income. You can do monthly income for a set amount of time or for life. So yes, you're getting less money with the HECM. And actually, if you're free and clear, the HECM kind of limits the upfront cash you can get to 60% of the total. So let's say that you qualify for $300,000 on a HECM, 60% of $300,000 is 180. So upfront, you would only get 180 with the HECM. You'd have to wait a year to get that extra 120. So if you don't need all the money all at once and you want to be creative with it, that's where the HECM wins. The proprietary wins in a bunch of cases. If you're younger, if you're under 55, if your home's worth over 1.209, if you need all the cash right away, occasionally with the proprietary, if your income is very low but your credit score is good, if your credit score is over 720, in some cases 720 or 780 in others, then we can actually do the proprietary without an income check, which is really neat. And of course, higher loan sizes almost across the board. By the way, you're going to have questions about this, so If you do have questions, here we go. This is me again. Hi. If you do have questions, then go ahead and you can reach out to me. Again, call me 888-309-9705, email, or go to reversequotes.com. And if you think it's a question that's beneficial for everybody, the other folks watching this video, then go ahead and type them below. I'd really appreciate it, and the others would as well. Okay, back to the screen here. Let's go. Make sure I don't mess this up here. All right, age 82, what can you do? Look at that, the proprietary is still winning at age 82. So $400,000 loan size, the proprietary is giving over 50% cash. The HECM's giving a little bit less. 700, 378 versus 327. $1 million, 542 versus 471. And $2 million, again, not a very fair fight, but you can see 1.086 for the proprietary versus 570 for the HECM. Age 92, here we go. Now, look at this. The HECM is actually winning. Here's why. For whatever reason, when you get to mid-80s and older, the HECM starts giving more cash than the proprietary. The only exception is that $2 million home value, where the proprietary is still winning, but it's not winning by a whole heck of a lot. So you can see as you get older, that should have been something in my slide that I put in. As you get older, you should look a little bit deeper and a little bit deeper into the HECM versus the proprietary. All right, almost done here. This is it. This is all I had for you, was just to show you where loan sizes are, where reverse mortgage loan sizes are today. And I figured that doing our own little reverse mortgage calculator at 92, 82, 72, and 62 would really help. Now, again, my name is Jason. I've done this for a while, since 2008. I've helped over 470 folks get reverse mortgages. Here are a couple testimonials: Oscar, Deb, Dave, and Dan. These are all pretty recent. If you want to see a whole stack of testimonials, again, go to the website, www.reversequotes.com. Here it is. And if you just scroll down from right here, you can get it on mobile and you can get it on desktop. But you'll see a bunch of testimonials and videos that I've made over the years from reverse mortgage clients. So if you need help, if you want to see how much money you can get out of a reverse, or if you just have specific questions about it, go ahead and reach out. Give me a ring. I generally pick up the phone unless I'm either chasing my kids around some sort of sports field, or in case I'm on a call with another client. So feel free to reach out to me on the website. Give me a call or shoot me an email, and I'll do my best to get back to you very, very quickly. And just so you know, with the process, generally these take about 30 days. And when you're in with me, when we're doing this together, I'll hold either myself or my partner, Frank. Frank's terrific, by the way. We both hold your hands through the entire program and the entire process. So you won't ever have a question that we can't answer. And we make sure that if you do need something, then we're walking through the process with you hand in hand. All right, that's all I've got. If you need anything, feel free to reach out. If you're not 55, 62, 72, 82, or 92, and your home values aren't right on that spot, and you want to know, hey, how much can I get out of my house? Feel free to reach out, and Frank and I will do our very, very best for you. All right, that's all I've got from here. Take care of yourself, and look forward to speaking soon. Take care.